I just finished watching the first 25 minutes of Jerome Powell's speech, and I found it fascinating. He blamed the weakening labor market on a lack of immigration. But does that really make sense? If you have less workforce, shouldn't unemployment go down? Let's go, beach cities. We're going to jump right in this week and focus on the high sale of the week, take a look at the numbers that matter in the market right now, talk about the Fed announcement and Fed rate cut that happened right before this recording. We'll take a look at a spotlight of a local great property that I think is going to sell fast. Let's get started. The high sale of the week this week was 1880 North El Camino, spaces 48 and 49. This was a double wide home site in North San Clemente that just sold for $5.4 million. It was originally listed back in 2022 with a price of $7.9 million. So after many efforts, they finally found their number and the right buyer for this home. Congratulations, sellers. This one sold. Let's jump into the numbers that matter here in the Beach Cities market, which again we've defined as Dana Point, San Clemente, Laguna Niguel, and San Juan Capistrano. Active listings, that is our supply, landed exactly flat this week with, again, 511 active listings on the market. So if you're a buyer looking to buy here in the beach cities, you've got 511 homes to choose from across all price points. However, demand represented by the homes that are in contract went up from 178 listings this week to 186. And in the last 30 days, the average sold days on market has been 46 days here in the beach cities, with sellers on average getting 97.5% of their list price at the time that they take their offer. Now we're seeing more and more sellers having to do a price adjustment to find the market, but when they finally do, on average, they're getting 97.5% of their list price. Overall trend that we're seeing across Orange County and the beach cities is that we're experiencing the seasonal decline in inventory that we typically see this time of year. But what is atypical is that we've started to see a significant increase in demand, with more buyers writing offers as interest rates have come down here in just the last few weeks from the mid to high sixes to today. We started the day with 6.13% as a national 30-year average mortgage rate. But again, that's going to be impacted by our next conversation, which is the Fed and the Fed rate. Let's jump right in. The Fed did what we expected today and reduced the Fed rate by 25 basis points. Now, this pricing was already priced into the mortgage rates because the bond market leads ahead of the Fed and lowers in anticipation of that Fed rate cut. Now, what's really important today was Jerome Powell's speech, which gives us a window into the future, a little bit of understanding of what he thinks about the market and what's happening right now and what we can expect in the coming months. I just finished watching the first 25 minutes of Jerome Powell's speech, and I found it fascinating. He admitted to being overly focused on inflation in the last several months and keeping us in restrictive policy, where now he said today is a step towards neutral policy, as they need to focus more on the risks of the unemployment, because unemployment has started to increase and the labor market has weakened. He blamed the weakening labor market on a lack of immigration. But does that really make sense? If you have less workforce, shouldn't unemployment go down? Right, there's something else happening there. Also, he dismissed the idea of potentially doing a 50 basis point cut today and said there wasn't broad support across the Fed for it. He also was questioned about whether or not the Fed is getting political or potentially being used by either political party, to which he responded, the Fed has always been and always will be something that is data-based, looking backwards and making sure that their decisions are independent of any political party in power, but based on the facts and the data. But if this were true, wouldn't he have increased rates much faster in 2021 when inflation was already ramping up? Also, he made several comments and concerns about future inflation based on potential tariff impact, which is still yet to be determined. And so while he's saying, we aren't political, we're very data driven, he's also making future decisions based on expectations of future policies that aren't even here yet. So I'd love to know your thoughts. Do you think the Fed needs to move more towards neutral policy or stay in restrictive policy? What I expect moving forward is that we're going to see a slow decline towards neutral policy as the labor market continues to weaken. If that changes, of course, I expect Jerome Powell is going to hide behind the mask of low unemployment at that point and keep us in restrictive policy, and we'll see mortgage rates stay roughly flat. But most likely, I would see a slow trend over the next 6 months, declining and hopefully dipping into the high fives in the near future. This week's deal of the week is 2 Novia in Laguna Niguel. This is a gorgeous home sitting on a 12,000 square foot pie-shaped lot at the back of a cul-de-sac with gorgeous views, priced just under $2 million. We rarely see a lot like this priced under $2 million. If you'd like to get a private tour of it, contact me immediately because I'm sure this one's going to sell fast. If you're enjoying this Beach Cities Market Update, go ahead and subscribe, like, comment, share us with your friends. We'd love to keep informed on exactly what's happening here in Dana Point, San Clemente, Laguna Niguel, and San Juan Capistrano with all things real estate. I look forward to talking to you soon.